something major just happened in the XRP market. We hit extreme fear levels that we haven't seen in months, but here's the thing. The AI models are screaming something completely different. Let's break it down. So here's where we are right now. XRP is sitting at $1.13, up 3.34% in the last 24 hours. Now, I know what you're thinking. That doesn't sound too exciting, but you know what I've noticed? Sometimes the most boring-looking days are when the biggest moves are setting up. We're still near those 19-month lows, which, honestly, feels pretty scary. But here's what's interesting. We're starting to see some life after being completely beaten down. Now, this is where it gets really interesting. The RSI is sitting at 19.40. For those who don't know what that means, anything under 30 is considered oversold, and we're at 19. That's like finding a designer bag at a thrift store price. The MACD is still negative, but here's the thing. It's starting to contract, which usually happens right before a bounce. We're also hugging that lower Bollinger Band, and in my experience watching these charts, that's often where the magic happens. Here's what moved the market today, and it's not pretty. Bloomberg's Mike McGlone just warned that Bitcoin could crash to $10,000. Can you imagine? That sent shockwaves through the entire crypto space. But wait, here's something I found fascinating. XRP is actually showing negative correlation with traditional markets right now. So while everyone's panicking about stocks, XRP might actually be setting up for its own independent move. On the regulatory front, it's been pretty quiet for XRP specifically, which might actually be a good thing. Sometimes no news is good news in crypto, but I did notice that Stellar jumped 90% after some institutional news, and XRP didn't follow. That tells me XRP is being overlooked right now. And you know what that usually means for price discovery later. The mood right now is, well, absolutely terrible. The Fear and Greed Index hit 12, which means we're in extreme fear territory. XRP search trends are down. Institutional interest is down. Everything looks gloomy. But here's what my grandmother always told me. When everyone's running away from something, that's when you should take a closer look. This level of fear often marks turning points. The big players are doing something interesting right now. We saw about 60 million XRP moved by whale wallets this past week. Now, that's either really good or really bad, but when I see whales moving that much volume near these low prices, it usually means they're positioning for something big. The on-chain data shows 638 whale transactions, and that's not normal quiet market behavior. In plain English, the Elliott Wave analysis suggests we're in a correction phase. But here's the thing. Some analysts are saying this looks just like the setup before XRP's massive 2017 rally. The Wyckoff method puts us in early markdown phase. But that's exactly where you want to start paying attention. One analyst even mentioned a cup and handle pattern that could target $14. Now, I'm not saying that'll happen, but the patterns are lining up interestingly. So what does the AI think? Well, this is where it gets exciting. The short-term prediction is calling for $1.63 with a 97.9% probability. That's a 44% jump from here. Medium term, we're looking at $1.54 with 62% confidence. And long term, are you ready for this? $2.16 with 98.6% probability. Now, I'm not an AI expert or anything, but when multiple models agree this strongly, it makes me pay attention. But here's what could go wrong. And I always like to keep it real with you. That extreme oversold condition could get worse before it gets better. We've got massive ETF outflows of $52 million, which shows institutions are still nervous. And if Bitcoin really does crash like Bloomberg suggested, well, that could drag everything down with it. The whale movements could also create more volatility in either direction. Here's my take on all this data. I'm recommending a gradual accumulation strategy. Not going all in, but dollar cost averaging on the way down. Primary entry zone is $1.10 to $1.15. If it drops more, I'd add at 95 cents to $1. Stop loss at 85 cents because, well, we have to protect ourselves. First target is $1.55, And if this really takes off like the AI suggests, $2.10 is absolutely possible. The risk-reward setup here is pretty compelling when you look at all the data together. That's it for today. Remember, I'm just someone looking at AI data and charts, not a financial advisor. Always do your own research and never invest more than you can afford to lose. If this analysis helped you see the bigger picture, hit that subscribe button and give it a like. I'll see you in the next one.